You're thinking of divorce, or maybe you've already separated and you want to know if everything, including money that you received from an inheritance, is still split 50-50 with your soon-to-be ex. Well, the answer depends on what you did with that money and when you did it. So let's say you use that inheritance money to pay down debt, which you or your spouse acquired during your marriage. Well, then you likely will not be able to exclude that money from your net family property when it comes to calculating your settlement and the equalization calculations. On the other hand, if you use that inheritance money to pay down debt that you acquired prior to your marriage, you might be able to exclude it from your equalization. When it comes to using that money to buy real estate, now let's say for example an investment property, it might be excluded from equalization from your soon-to-be ex, depending on the financial trail of the money and whose name the property is in. However, if you used your inheritance to help purchase a matrimonial home or pay down the mortgage on your matrimonial home, then it likely won't be excluded from your equalization payment. If you received an inheritance and the money was kept in a bank account or an investment account that's in your name only, it may be exempt from your equalization. But if you deposited that inheritance money into a joint account or a joint investment account, then it likely will not be exempt from equalization. Now, let's say you inherited a property, say for example a cottage, and let's say you rent it out to renters part of the year, but often other times you'll vacation there together as a family, or perhaps your soon-to-be ex spent time there with you and does repairs and renos and upkeep. Well, then the value of that cottage might be excluded from net family property or equalization, but the rental income that you received will have to be split. Of course, this depends on many factors, such as if there's a financial trail of the rental income, how much time you've spent as a family at the cottage, and so it could potentially be considered a matrimonial home as well. And that's all assuming that the property is located in the same place as where you live. What I mean by that is, if you live in Canada but inherited a property in the US, then different rules may apply. Remember, this is a general guideline, but financial questions and legal questions can always have a unique and extenuating circumstances type of role in your own divorce. So you should always ask a lawyer, or in this case an accountant or a certified divorce financial analyst, before you agree to any settlements or make any final decisions. If you want to know more about net family property and equalization payments, check out my video on this channel called Equalization and Net Family Property. I'll put a link below for you in the comments section. And if you'd like the name of an amazing divorce financial analyst or a lawyer who are both experts on this topic, by all means give me an email at mike@divorceguy.ca and I'd be happy to make an introduction and put you in touch with them. Don't forget to check out my friends at divorcespecialistgroup.com. You're never obligated to work with any of their professionals, regardless of whatever type of professional you might need, and they have the highest standards and the best vetting process in the industry when it comes to hiring their professionals. They also have a free download you can get. It's a free divorce checklist, so you may want to check that out as well. Remember to click on subscribe, and I look forward to seeing you in the next video.